really well, I must say.
I think you've got an opportunity to change your corporate communication now, my friend.
Well, I just think it's quite amazing because the fact that Vince is going to come on. Oh, by the way, we're live. Hello, everyone. I've got the guys from Catapult here to have a chat with us. But
hello.
I'll tell you what, it has been. It's Friday again. You know what Friday is, Ben?
Time for the pub. Time for the digital pub.
Come on, we're English. Poets Day.
Oh, of course.
What does Poets Day stand for?
Not sure. Enlighten me.
Piss off early. Tomorrow's Saturday. So, boys, how's the week been? I actually read your article, Mike. I thought it was really good. And I've actually made the title of this little stream about smart money and what Aussie VCs are going to be doing with their money, or what smart VCs are going to be doing post COVID-19 with their money, which I think is a really fascinating subject.
Well, it's a good question. It's a very, very, very long answer. So, where do you want to start?
Mate, I can tell you what where we are right now. It's and I know COVID-19 is looking like it's coming to a bloody end next week because, and I get anxiety because I think this is a great actual. COVID-19 has been good for us as a company, as a startup. We've grown. We've got 5 staff working with us now. We've got 200. Hold on, I'll put it on the screen. You can see it at the bottom of the screen. Look at that.
Yeah.
There's 240 executives that have just signed up, and we've had some amazing ones this week that we're about to tell the market about. People from the New South Wales Department of Transport, CISO. We've had the CTOs of what they called Afterpay. We've had the CIOs of some great big companies, which is about 20 of them, I think, this week have almost come on board, which is really amazing. So COVID-19 has been really good for us. It's helped us focus a bit, and we've grown. We've probably done more revenue in the past 2 months than we did the whole of last year because of COVID-19.
That's great news.
It's funny when I met you three years ago or so, and I kind of fell in love with the business model. You were kind of excited by the fact that you had kind of 2 or 3 meetings for good, or meetings booked in a week, and it's impressive to see the business models really kind of taken foot, and obviously people are responding to that both on the philanthropic side, but also the connecting corporates with suppliers piece. And so, I mean, how many meetings? You're interviewing us, but I'm asking the questions. How many? What's the average number of appointments or meetings you're doing a week now, Carl?
Probably about 30, I'd imagine, at the moment.
Wow.
I mean, yeah. I mean, we've it really is. And Ben, to your point about doing 2 or 3 and being excited, yeah. You know why? I was broke, and that $3,000 that came in for the week meant $900 in my pocket because we give 70% of it away. So that was food on the table, and I can't help but think when I look back at those times and where we are today, it is light years apart from where we were. And I've almost got to thank COVID-19 for that, because all these right now we're this close to signing a deal with a client, with a new client, and they've got the letter G in their name, big global company. You might use them occasionally when you're browsing.
I'm with Poodle, by any chance.
And when I look at the brands that have come on board, but more importantly, what they're saying, it's really remarkable. We had yesterday one of the biggest technology vendors on the planet turn around to us and say that we have, hands down, been the #1 campaign in the enterprise market that they've ever done. We made their number twice, 2 quarters in a row. And I'm like, wow, that's really powerful feedback.
It is. It's very, very good.
So anyway, enough about me, Mike. Tell me what's going on. I want to know where the money is.
Well, coming back to the COVID-19, I think the biggest thing that I see is that COVID was just a small trigger point, which is a lovely excuse for having a great financial crisis. And in my humble opinion, we're going to be feeling this financial crisis not just for a couple of weeks, not just for a couple of months, for several years. And I would be absolutely love to be completely wrong on this one here, but there's not a lot of signs out there that support that I am going to be wrong, simply because the economy is going to hit a very, very severe set of obstacles. And, without turning this into a lesson in economics, because I think we weren't going to make everybody fall asleep, what that does mean from an investing perspective is new opportunities open up. Things that, a couple of months ago, you would never have thought about investing in all these virtual technologies. Suddenly anything that's virtual, it's like, oh my God, this is going to go through the roof. We all know that if you bought shares in Zoom a year ago, today you'll be a multi-millionaire or something like that. It's just mad. And one of the biggest things that I've observed in the last 2 months, in particular since lockdown really took hold, is that we've lost the concept of sectors. There isn't such a thing as, oh, don't invest in the hospitality sector because hospitality is going down the gurgler. Yeah, except we got one of those that is not going down the gurgler, but double their revenue in 4 weeks. It's like, call that going down the gurgler? I don't think so. Yeah. And we're not talking about small numbers. We're talking about big numbers. Now, how did they do it is because, luckily, thank whatever is up there, that we got in time and got this thing happening for them. And I'm not trying to give ourselves a pat on the back, but it's like, seriously, we saved a business, right? And it's like, there's a lot of other businesses that we know of that are going through the roof, regardless of whatever sector they're in, regardless of whether it's a flavor of the month or not flavor of the month. And so one of the big things that I see that we're going to get coming out of this, whatever coming out of it actually means, is that from an investment perspective, people are going to view the entire market differently. Like, we traditionally had, say, a banking sector. Okay, we still have a banking sector. The banking sector as such is not going to come away, but we, for several years, been talking about, banking and neobanks and other financial kind of tier 2 and tier 3 and all that kind of stuff. And my view is that, the group of banks and other financially related institutions, they will still be there in 5 or 10 years, but the whole landscape within this will completely change. And it won't change down lines that are as predictable as they were maybe a year ago. So a lot of it's almost like, somebody laid a very nice puzzle and they kept it in the box, one of those really big things with 5,000 pieces. And a very naughty little brother came in, put the lid on the box and took it and says, see, they're still all in there. And the big sister comes in and goes, yeah, what did you do? Like, that's what just happened to all the fault lines that VCs, like private equity, like significant wealth investors have been looking at for years. It's like, we're not really sure that the ways we looked at this before will be the same in the future.
It's really interesting. In your article, you speak about the fundamentals. Now, this was the one ambiguous point that really stuck to me. I thought all the other points that you mentioned about that these investors are going to look for were great. But that was assuming the fundamentals are correct, that for me was the one thing that gives them the out that says, oh, your fundamentals weren't right. And you can't really put fundamentals into a box because it's so wide and ambiguous. Tell me what you really meant by it.
I mean, in one word, revenue. Right. It's like we've seen the rise and rise of a lot of fantastic companies that have been making lots of people happy and so on and so forth. But they are, in impolite terms, they're built on air boxes, they're built on sandcastles, they're built on, oh yeah, but we have 10 million, 20 million users. How much revenue you got? Oh, not much. Yeah, but we've got lots of users. We own this market, but how much revenue you got? Oh, not much. And my view is that, the world through this crisis, whatever you want to call this, will wake up and go, uh-oh, it was the emperor's new clothes. They didn't actually have any clothes on. And the reality is that we will see an investing world that shifts back into fundamentals. We've already seen for a number of quarters now that the average valuations across same sector comparison between private equity and listed equities, private equities ahead. And this is not us inventing these statistics, is companies like Bain & Co. in the US, which is a relatively prestigious high-end kind of consulting firm, and they really know what they're talking about. And we're just watching these trends. They're going, wow, we're set for a complete repositioning of the entire marketplace. It's hard to sell hope in a bottle anymore when all your hopes were just crushed, when your grandmother died, or when your whole family's been locked down for 2 months, or you got stuck in a foreign country, couldn't get back to Australia. It doesn't matter what you experienced, but a lot of people have had a traumatic experience in the last couple of months. That experience is going to stay with them. It's not just going to be, oh no, we can go back to the pub next week if we talk about 50 people, all that kind of. That's lovely, but we haven't just lost that memory of that trauma. It's not going to disappear that quickly. And I think that is what's going to drive the view of, oh, what are we really doing? I mean, I'll give you an example. We spoke to a lovely lady that I know reasonably well in Melbourne just the other day, this time last Friday. And on the call, she said, oh, you know what my next call is? I said, I don't know. I'm going to call my broker. I'm going to ask them to sell everything. I said, what do you mean? I'm selling everything. I said, well, and I've jokingly said to her, well, do you mind, can you sell it before 4:30? Because I just want to make sure that if the market dropped this week, which it didn't in a dramatic way, but if it had, wouldn't want to have the conversation and she hadn't been able to sell out. But people are literally reevaluating from scratch, where does the future lie? And I would be very certain this woman is not going to, she didn't rush out this week and start buying some other things. She's going to take some serious consideration. Okay, what does the investing landscape hold for the next 10 years? And that's what we're pondering, obviously, as well at our end.
No one knows today. Sorry.
Everyone kind of, all the big investors that we know, they're all trying to be as liquid as possible at the moment. And all of the old, industry-based investing and kind of the market-based investing isn't driving the same yields as it once was. So everyone's looking for interesting private equities to invest in and obviously get a much better rate of return, but it's also perceived as a little bit risky. And so I guess what we've done is we've always looked for insights and trends in terms of the businesses we're looking at to go and help, whether that's acceleration or driving a cap raise for them. But the whole market, as Mike said, has been completely turned on its head. The innovative kind of tech, a lot of the innovative kind of tech-based companies that perhaps we were looking at some months ago, they're no longer relevant. We were doing a lot of work in the kind of outdoor and digital signage space. That's maybe no longer relevant at the moment. So it's a funny market, and I think that the businesses that will do well in this new economy are going to master their business model first and foremost. As Mike always says, it's the age of the business model, and be much more human-centric because the needs of humans have changed and become much more closer, geographically speaking, and the way that we want to connect virtually with one another. So there's going to be some winners and losers, but fundamentally, we don't think that the world's going to go back to normal. And maybe that's the reset that we all needed to have,
Yeah. My neighbor upstairs, one floor up, is a partner at Pricewaterhouse. And she told me they had an internal survey this week, and 70% of the staff don't want to go back to the office.
Nope.
Right there. I mean, that tells you, what are they going to do with Barangaroo, with all that real estate that they paid millions of dollars for? There's a whole lot of companies like that. I know Westpac is saying to all of their IT team, stay, work from home.
Yeah. And I mean, this is what I'm going to say next is not to scare anyone, but this is one of the multiple overlaying scenarios that we've been studying in a lot of detail the last couple of weeks now, 4 or 5 weeks, and is like, we now know that there's roughly 15% of the entire workforce says, I'm probably never going to go back to the office. Okay, so there was 15% that used to go into the city or Parramatta or wherever they went to before, that will not do that anymore. On top of that, the average company, like a PwC or like a bank or even like much smaller companies, a lot of people say, well, I'll just take 1 day a week while I work from home. That's another 20% of his occupancy that won't be there. So you take 20 and 15, there's roughly 35 put together. So think about every third building in the city will now be more or less empty. Now, that doesn't mean the real estate market is going to collapse overnight because we've got long-term leases and whatever not. But it means that over a 10-year trend, you will see a lot of these office buildings that won't be office buildings anymore.
Be residential.
They will be residential. That requires rezoning. That's something that at the moment you can't just do. So it requires a complete rethink of the social fabric. We're sitting in Sydney here, and if we compare Sydney and Melbourne, one of the things we love about Melbourne is there's actually life inside Melbourne CBD, but there was no life in Sydney CBD. Well, this could indeed bring life back over the next 10 years back into Sydney CBD because there'll actually be people here. So what's going to be the consequence of that is going to be a blossoming of hospitality industry that otherwise we just predicted is now going to go down the gurgler. Oh, hang on a bit. So do you see how a lot of these trends, when you start thinking them through, you go, oh, I thought I really knew which ways it's going to go, but longer term, the picture is actually the upside down of what otherwise would be logical.
I mean, there's no predictable outcome of what anything's going to happen. This is the thing that gets me. You know, here in Darling Point, we're seeing houses going up for sale because people are shitting themselves because there's a 40% drop coming, so they claim. So yeah. This is the word on the street, on the park here. Is like there's all these multi-million-dollar houses, and there's for sale signs everywhere. So there's obviously a lot of fear in people losing a lot of equity or a lot of cash out of that business. How do you go about as a VC or a company that gets people ready for venture capital? How do you find investors that are still willing to invest when there's all that sort of fear and uncertainty in the market?
I think you do that by throughout both this period and throughout the years, we've stayed close to a few. We've never tried to build, if you will, the biggest database of investors out there, because there's other people out there that are very much good at building big databases, not us, but we build a very small database of people we actually have some degree of connection with, and we actually know their mobile number, we call them up. And that way you get a sense of, sure, they may not be investing in everything that moves anymore, but they still love investing in this, that, and that. So, if you've got a client that is just in that category, well, you just know the 10 people to call. And that doesn't mean that all 10 of them are going to give you money, but it does mean that there is a very real possibility of actually carrying this into the market. I think the general sentiment, I think if you look just after lockdown, everyone took all the cards off the table. It was like, don't even call me. There's no need to talk. We're still thinking about it. But in the last 4 weeks, it's changed to, we are buying. What do you got?
Yeah,
right. Because the reality is that everybody knows in a downturn is the best time to buy. Like say, just to get something as benign as the house you just talked about. Well, when's the greatest time to buy a new house? Is obviously when the market is down, not when the market is up. And it's no different buying, say, unlisted companies or private equity. It's, again, when you get the best bargain is when the market is near the bottom. Now, is this the bottom or not? I don't know. But it's just like we're certainly not in the best of times, that's for sure. And will this next 6 months provide even better opportunities? I'd say possibly. But again, that depends very specifically on what company we're talking about, because a lot of the companies we are helping right now are companies that are going through the roof. And, so they're probably not there's going to be no turning back for some of these. But, in terms of do investors invest right now, I think that's a resounding yes. But do all investors invest right now? No, of course not.
I mean, sorry, yep.
The feeling we're getting, and we're running a number of cap raises in parallel at the moment. The feeling we're getting is the heavy duty senior seasoned investor, as Mike said, is very bullish and is hungry for deal flow. So we're getting calls around what's hot, what's coming, what's ready for investment. The kind of moment, and this isn't a complete blanket statement, there's caveats around that, but the mom and pop investor are probably, pulling back the reins there because they've got a higher risk profile, and they're probably investing more than 1% of their portfolio into a private company, right? Whereas a big investor would be investing a very small overarching aspect of their portfolio into a company. So it's an interesting one, but we'll see what happens. It's changing week by week. One thing I think would help is consistency with the government message and policy around the job seeker grant, how long that's going to last for. Being relatively pragmatic about opening up the economy. I think I don't want to get too political on this show with you, Carl, but ultimately, investor behavior is downstream from government behavior, right? So if we have a more stable government, and I know it's hard for the government because things are changing almost hourly with the medical crisis that we found ourselves in, but investors like slow, predictable government policy because they can obviously react to that. So I think things will settle down once things are open, and then we'll kind of take a breath and assess where the opportunities lie.
The irony is you've got Elon Musk on the wall behind you.
He's our
complete hero.
Well, he's struggling with his behavior in his Californian state. regarding he wants to get his team back manufacturing rockets and electric motor vehicles. And unfortunately, the government policy there is specifically draconian. So he's talking about moving his entire manufacturing supply chain to Texas, of all places, because they've got a more, I guess, looser and more liberal aspect to reopening. So that's a great example that you just mentioned of an amazing innovator and fantastic group of companies that are being seriously hampered by government. Whether you agree or disagree, and I'm sure there's some very striking medical data that perhaps supports that, but that's going to be a problem because people need to go back to their office jobs and need to go back to their manufacturing jobs. And I think we had a conversation a couple of weeks, Carl, is what's the human cost behind the COVID wrecking ball? Obviously there's been a lot of tragedy, but keeping people penned up in their homes indefinitely is going to have an impact on mental health and perhaps cause more damage. So it's a difficult dice to throw, isn't it?
It really is.
Sorry.
No. I'm saying it really is. I mean, the point is, no one knows what the outcomes are going to be. No one knows where the second or third or fourth wave. And I think the fourth wave is probably mental health problems, and I think no one can predict what that's going to look like at all.
I mean, but I can give you a fresh example from the difference between New South Wales, Victoria, and Queensland. Is, as we all know, Queensland is choosing to keep the borders closed, and I saw a Polly Hanson stepping up and says we're going to take to the High Court, which is whether that's the right way or not. I'm not going to comment on that. Yeah. But I can tell you right now, I was intending to fly to Melbourne next week because we've got lots of clients that we're going to do business. There are no seats available on neither Qantas, nor Jetstar, nor Virgin to come back from Melbourne. So I will be impossible. I can't go.
You could take the train.
I could take the train. I could drive. But so, basically New South Wales and Victoria, or if you will, Sydney and Melbourne are firing up like crazy already. And, I'm feeling a bit sad, quite frankly, for those significant business in Queensland because they're just going to be left behind. And, I don't understand why the government up there has chosen the line they have, and I'm sure they got their great reasons for doing that. But I think it's very, very important to understand the financial well-being of all the businesses out there is what we really, really got to look after in the coming months, which is also why we started the reboot initiative that we talked about. And it's like, it's like our biggest thing that the COVID was a blip on the radar, in my humble opinion. Yeah. And I think we handled it medically. We handled it exceptionally well, probably best of class in the whole world. But the financial repercussions are going to be very grave, and we, quite frankly, we all pull together and just get back together to work. And it's just, we're going to see an insane slump in the economy. We're going to see an incredible drastic reduction in the trade balance. Like it's going to go very negative. This is going to take a lot of hard work. And
you know what? My daughter's studying for a year 12 in the back here, literally just behind over my shoulder. She's studying Alexander the Great at the moment. And she just read to me the story of him and what he did, and it was basically the amount of resonation that it had with business leaders, and this comes down to the federated economy that we're living in right now. Because for me, when you've got so many different federations, and there's no leadership basically there. You've got everyone allowed to make their own decisions, and you see the same when that's happening inside organizations and companies. Like there are big companies right now that we're dealing with that have there's no leadership overall. It's everyone makes their own decision, and that causes problems. It causes a lack of standardization, there's all sorts of different reasons why it's a problem. And Alexander the Great was a great person that forged the way forward, but he wasn't a good leader.
Yes.
And and there's a lot of, and I feel like that even me running this little business at the moment, great for forging the way forward. But when we become a multi-billion-dollar business, I'm not the CEO for this company.
Sure.
And so that for me, I mean, I don't know where I'm going with it, but I guess the whole point of that conversation is, how do you find the right people for the right job when you've got all these problems that are existing that are not being fixed? Because I'm trying not to use names of companies because we know too much basically, but but there's things out there that are happening in the market, and I just look at this and I shake my head, thinking, well, you're Alexander the Great, but you're not the right leader for the job.
Well, the thing that I observe, I mean, a lot of the companies we're dealing with are obviously smaller companies, but they're not necessarily small companies. And a lot of those companies are in a sort of middle bracket. The thing that pulls everybody through a crisis moment or crisis period like this, in my observation, you might see differently, but it's purpose. And because the purpose is what survives, a management team, or survives another board meeting and whatever not, is why are we actually here? And if that purpose is still aligned with the new economic times we're heading into, that company is almost guaranteed to thrive. On the other hand, if that purpose is no longer a fit with where the world is going, well, that company is most likely going to hit into some pretty serious trouble. And it may need to refashion its purpose. It may need to find a new direction in life. And that obviously takes time. You can't do that overnight, particularly if it's a bigger company. That's impossible. And I see that the purpose and the vision, typically of the founders, transcends whatever the management team is this month, this year, this decade. Yeah. And I see a lot of the great companies that we admire and how they grow forward. It's because they're still carrying forward that purpose that was created, that vision for that company.
They haven't sold it out. Yeah, exactly. And this is, there's Mark Boris is probably a classic example of that, because if you look at Mark Boris as a CEO of Wizard Home Loans, and then he sold it, whatever, and he became, I think, Yellow Brick Road, and then he's sold out his corporate, basically sold out his corporate image, and he's moved over to doing the coaching and the small business coaching and mentoring. But that's actually ostracized all those corporate people that he was typically involved in. So they all think he's a bit of a tool, but he's actually, what he's done is he's focused on what is really true to him, and gone after what really is important to him, which is helping other people, small businesses grow. I wanted to ask you a question about the whole investment. So I know you guys you get companies like us ready for investment, and I think to get the house in order is really important. What are your thoughts on taking on board like cornerstone investors? So you might have, a couple of 50 grand cornerstone investors. You might have one keystone or key investor, and 4 cornerstones. What are your thoughts on that sort of model?
I think for some it can work. I think the thing that I see and I had that very conversation with one of our prospects that I spoke to for a couple of months, just last night, and the trouble is the entrepreneur's expectation. Let's say that you get a cornerstone or keystone or whatever you want to call it, but a significant investor says, okay, I'll take a significant part of this round. Well, that doesn't mean that he or she is going to then take and get the rest of investors in. I mean, we're not necessarily saying that they're forming a syndicate, and we can't necessarily outsource the problem to, you go and find the rest of the people. It rarely works out. It can work that way, and you can get lucky, and that's all great. What I see more often is that you find maybe 3, 4, or 5 great people that are investing and have been doing investing for a period of time, and each of those 3, 4, or 5 people bring 2 or 3 of their mates with, and suddenly now you've completed the round. So it's very similar to the model of the keystone or cornerstone investor, but it's a bit softer. And the difference here is that it's risk adjusted. In other words, okay, so you thought you had 5, I guess one of them decided not to go along. Well, you got 4, and each of them bring along 2 of their mates. Well, you got 12 investors. You're probably going to close your round, maybe a little bit short, but you'll survive. But if you have one cornerstone and he disappears, well, okay, we'll start over again. And so the hesitation I have is always with a cornerstone investor is, are they truly committed? Because if they're not, then you're just living on this smell of hope, and you go, wow, we're almost there. We got the cornerstone in his ear. It's almost signed the documents, but you can say almost for 6 months and it still doesn't happen, right? And it does help when we got a client in Melbourne that just said, hey, we got 2 guys, they're pretty keen, and let's just say they're public figures. Let's put it that way, these 2 people. And you go, wow, you got those 2 people. I go, wow, how did you do that? Was my immediate response, right? But it's like, they're the kind of people, if they said they're going to do it, they are doing it. And it's like, and I'm not in any way suggesting it. If it's just out there, some may say, well, I'm doing it but not doing it. But, there's a difference between doing it and doing it right now and doing it at some other time, right? And I think, sorry?
No, that's okay. Keep going.
No, I just think that's something that's as an entrepreneur, that's something that people out there need to be aware of. Like if they're watching this little episode here, is like just think through all the different risk scenarios and make sure you look after yourself, because capital raising is hard work in a sense that it takes you away from the business. It can be emotionally draining because you don't really know what you're dealing with, and you think maybe you're going to get weird terms presented to you, etc., etc. So lots of emotional triggers on that. But it's on the other hand, it's very rewarding because you're going to meet some amazing people. Then you're going to go, oh my God, we're actually going to be on the same team for the next 5 years while we're on this investment up to a sizable value, and it works both ways.
Yeah, I've been contemplating now rebuilding our platform and website and everything. And I thought maybe we could find a Zero or a company to fund that, and they get sponsorship of it. And we've got clients now that want to take us global, and they want us to expand into Europe and Asia with them, which is really good. So it's almost like the momentum's there right now, which is really powerful. And I think the whole money thing for me is in my head. I've got this let's do it organically model, but I just know it. I know you can only get to a certain point when you do it organically, and to do it fast and quick, you need to take the Catapult road and get your house in order and go and raise some money. And I get that. I totally understand that.
Well, I think one of the big things about getting the house in order, I'm really, really glad that you're saying that, because the biggest thing about getting success isn't the capital. The capital is an enabler. Capital just means you can do more things sooner than you otherwise could. It doesn't do anything magic really, unless it's an insanely expensive development project. You need $5 million to develop X, and you just don't have $5 million. Well, then it's the only way you get to X. But for a lot of businesses, in terms of raising expansion capital or growth capital, it's really about, hey, I can grow organically, as you just said, or we can, basically put a firecracker up the bum and just, make it go really, really fast. But the reality is that you cannot do that successfully unless you got your systems, your structures, your processes, your procedures, your policies, all of those terribly boring things that you really got to get sorted out. And it's almost like, I know every time I'm on the stage and say this to people in front of like 100 entrepreneurs, they're going, boo, like you don't want to hear about systems and structures and processes. Oh, that's for old folks. You don't want to do that. But the reality is that, you can't go and hire, say, 20 people once you raise the capital, and that's what often lots of companies need to do. But you haven't got an org chart, you haven't got any job description, you haven't got a human resource policy. What happens if somebody falls and hits their head and you've got an insurance claim and you realize you didn't have insurance? I know these are such dumbass little things, but it's actually what breaks these companies when they're trying to scale.
Yeah.
We also, Carl, we often see companies that come to us maybe a little bit too late. So, they think they can grow organically, and some of them can, and that's great for them, but that is the exception, not the rule. And they come to us a little bit late, and they've got all these kind of weird term sheets and skeletons in the closet, and their parents have invested them. And so oftentimes what we're doing at the beginning is unpacking the spaghetti of what they've been doing for a number of years to make it investable to an investor. And that's a funny way of repositioning what they might be doing. The other thing is, oftentimes we're working with subject matter experts or people that have produced products. And you made a really good point a few minutes ago. If you're a subject matter expert and you're highly product centric, that's a wonderful thing, right? And oftentimes they're obsessed with raising the money to finish their little product, basically. And so some investment capital can be used to improve systems and processes of the product, but investors want it to be used, the capital for growth capital, right? So expansion, as you mentioned, marketing, hiring a high performance team, commercializing the product in more of a scalable way that can perhaps be traded, exported into other markets, as you mentioned. And that becomes an interesting quandary with the types of people that we work with and we're looking for, is that sometimes the founder of the company isn't the right person to be the CEO to take it globally. And that's a funny ego journey that you have to go on, and to kind of not be that person. Of course, you be the primary shareholder. It's still the majority of it's your business. But oftentimes that we have a struggle with the founder, that they just may not have the experience or EQ or IQ to actually make it happen. And that's the road is paved with many stories like that when you look at the largest successes in the world. So that's an interesting thing.
Yeah, and again, I think business models are changing so fast, right? I mean, we look at all these companies that have gone into COVID now who are really struggling to manage teams remotely. They don't know what to do or how to do it. They want to micromanage them. I've heard horror stories, complete horror stories of law firms typically, who are telling their staff, your phone cannot ring more than 5 times before you answer it. If you go to the toilet, we need to know where you are. And they're literally saying these things. You will do these things.
Yeah.
And I thought it's micromanagement on a whole new level. Now, I look at what we do with our team, with Maddie and the girls and Colin and everybody. I say, you know what? Here's the outcome that we're going for. Don't care where you are, what you do, how you do it. That's where we're trying to get to. And so everyone's working towards that, and they're working out ways to make it happen. And that's sort of empowering them to actually go off and find ways to automate things, to find better ways to free up their time. Because ultimately, we want to make 80% of our time free so we can do other stuff, not the mundane stuff. So it's all about automation. And I think if you're not empowering the team to do that, then you're going to try, everything's going to remain static. And it's just, you can't. So I think the business models really need to, and the mindsets around that need to change.
And that is very much, that's why we are betting everything on that this is the decade, of probably several decades of the business model. And the business model doesn't mean there is one business model that fits everybody, but it's like the focus is on selecting the appropriate and preferably the greatest business model within whatever the business is doing. Whereas you go over the last 20 years, 30 years, whatever long back you want to go, if you had a great tech platform, you were almost certain that you would at least make it somewhere up in the rankings, and you run a fairly decent, even a great company, even a supersized unicorn. And my prediction is that technology is no longer enough. Technology is now just going to be the entry ticket to get into the stadium, because everyone's got technology. And I've been part of running technology business for a couple of decades, and it's like, I'm showing my age here, but it's the reality is that, back when we started one of the businesses, building a serious software platform cost you millions of dollars. These days, you can build a serious platform for a couple of $100K. And so it's leveled the playing field around technology business. It's not that's not a defensive mode or defensible mode that you basically can now live on forever. And what replaces that is the business model. And we've seen some examples, people that come to pitch to us just in the last couple of months, some of them remotely, obviously. And then basically business doing almost the same, almost identical offering, but with a totally different business model. And one of them, seriously, we looked at each other going, my God, I mean, tech is, or whatever, it's kind of okay, but it's pretty crap, really. But the business model is, wow. I mean, this person can walk into any business he wants to sell to, and they will say, wow, that's a great idea. When can we get started?
Yep.
Because it's like one of those, no money down, take the problem off our hands. Thank you very much. Let's get it happening. And you see that and you're going, I know this will be successful simply because of the business model. And with a client in Melbourne, they completely rewritten the business model for car parks. And we're all going, car parks, like, can we find anything more boring than this? It's like, geez, bits of concrete, boom gates, and car park antennas are never there when you need them. Like, that's just horrible. And these guys completely rewritten the book for the business model for car parks. And at first I was like, yeah, very funny. And then I started looking at it closer, and then I got in under the hood, and I've now written a couple of versions of the financial model, and they're going, holy crap, this is amazing. Yeah. And again, they're met with the same kind of response when they go and talk to the big boys. They're all going, wow, that's amazing. So when can we start? And see, literally some of these prospects have said, well, we just put all these things into these car parks, but we're having to rip it out and replace it with your stuff because it's so much cheaper and it's so much better. It's like, okay. And so we know that, the business model is the one that will make the difference between those that prevail and those that will fail.
But I know there's a lot of companies out there right now that are just cobbling technology together. All these different forms of technology exist. They put it together, they package it up, they put a little bit of smarts over the top of it, and that's the new business model. They've not even built anything.
Well, that's not. There's no IP. There's no intrinsic IP. I would call that an assembly business. It's an assemblement of lots of technology that's stitched together arbitrarily with a nice front end and a marketing campaign. That isn't a business model. I mean, it solves a problem. I'm sure it helps companies be more successful, but that is an example of a non-business model, isn't it? It's not particularly exciting or engaging, or it's not going to drive a huge amount of change in the market.
Mate, it's really interesting. Absolutely fascinating subject, though, the whole money thing and the investment and where the money is going to come from and what's going to happen over the next few months. It's going to be really interesting to see. You know, I always look at, for us, we're in our third year now, and I always take things back to Airbnb, and I realized they only got their first 20 grand seed money after the second year. It wasn't until their third year they got 600 grand from Sequoia, I think it was, but it was 2 or 3 years of slog.
Yes.
To get it off the ground and get things to a point where it was investable.
Yeah.
And I think we're in that point now where we're investable, and I know we've got to get our house in order as well and start looking at all those things, because without the knowledge that you guys have, all of a sudden we find ourselves trying to scale and we go, oh shit, we didn't think of that, and then we hit a roadblock and it stops you from scaling, and then you lose momentum, and then you're dead, and then you whatever. So I totally understand what you guys are doing, which is brilliant. I think my only reservation in my head at the moment is that people aren't going to be investing money, but you just spoke about that for the past half an hour, and they are.
Yeah.
Anyway, waffle.
To be investing.
Have a look at this.
Sorry, waffle.
Have a look at this. Do you know who he is?
Yes.
He's coming on LinkedIn.
Comedian.
He's coming on LinkedIn Live with me next Wednesday.
Oh, fantastic.
That is going to be the funniest LinkedIn Live you've ever seen. He'll be talking about. He understands why people are hoarding toilet paper, but don't understand why no one's hoarding tofu.
It's a fair point.
I don't understand that either.
Boys, I want you guys to have a cracking weekend. 45 minutes we've waffled on.
Thank you very much.
I'm going to go and cook some dinner for the little ones. Well, they're not little anymore.
Well, thank you for having us. Really appreciate that.
No, I appreciate it. Let's catch up soon, hey? We'll come have a coffee.
We can have a
coffee now.
Sorry?
We can have a coffee now.
Yeah, we can. Let's go and do that.
Let's do it next week.
Cool.
Thanks, Carl.
You're on.
Appreciate it, mate.
See you, Ben. See you soon. Cheers, mate.
Thank you very much. Take care.
Bye.